Welcome back to another video. Today we are going to take a look at the US oil from a technical, fundamental, order flow as well as a sentiment perspective. Now if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you'd like for me to cover in my next video. Now before we get started, this video is sponsored by the FXE Academy. Enrolling in the FXE Academy, you'll get access to their beginners course, intermediate course, expert course, differences between MetaTrader 4 and 5, market research videos. They also provide forex signals on a daily basis, the economic calendar, as well as ebooks. So this is a earn while you learn. It is a yearly subscription and is very cost effective as well. So let's jump straight into the video. So we're going to start with the technical analysis. Now starting here on the monthly time frame, what do we see? We can see here that February was quite bullish for the US oil, obviously because the tension between Russia and Ukraine started stirring quite aggressively. And then what happened was they started to say that they were going to talk about how they can come to an agreement, and then we started seeing the sell-off over there. Now the last structure that the market had created was sitting at this level. Now the market also printed this massive impulse. So after an impulse you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of this impulse, and you can see how we got a potential 61.8 Fibonacci lining up with that structure. Now the best way for us to determine whether this market is going to continue this low is to see the day is to 28. If this market does close below this level of resistance, then we can definitely expect this continuation to the downside to happen for the US oil. Now from a weekly perspective, what do we see? Now here on the weekly time frame, we can see how the market had not been literally moving anywhere. So the market had been stuck in this consolidation phase. The market entered this consolidation phase on the 7th of March, and it's been there for almost 2 weeks now, and there is no clear indication of whether we're going to get the breakout or the continuation to the downside or to the upside. Now here on the daily time frame, firstly we can still trade this consolidation phase, so we're going to use that as our take profit level in the market. Now if you drop down on the daily time frame, what do you see? Now from a daily perspective, the price action is quite interesting. Now if you look at the kind of price action that we have over here, we can see how the market printed this inverted head and shoulders pattern. Now the last time I made a video, the market was sitting around this level, and I explained all of the reasons why we can see that pullback before the continuation to the upside there as well. Now giving us with this bullish price action that we have over here, the market had, like I said, printed this massive impulse and the correction. And if we want to measure that take profit level, all we have to do is take our Fibonacci from the low to the high. We're at a 50% pullback, and we can definitely use this as a take profit level in the market. Now that would obviously be the consolidation phase of the of the weekly time frame as well, but you can also use this as a target level as well, because that would be the top, or not the top but the middle of the wick that the market had created over there. So the long term the long-term target for this market is obviously bearish. We're going to speak about the reason for that as well. But because we are stuck within a consolidation phase, there is no reason of why we cannot make use of this move here as well. So be careful that we do have this range here as well on the daily time frame. Excuse me. Now ideally what I would love to see at the end of the day is for the market to obviously break below this structure and then start looking for selling opportunities for the market to go and test that monthly resistance that is now turned support, this level over here. So the way I would approach the situation is I would firstly wait for the market to break below this level, and then on the retest start looking for selling opportunities for the market to go and test that previous level of support that would be then turned resistance. Now the next thing we are going to look at is the order flow data, so the commitment of traders, and this tells us what the biggest banks, hedge funds and institutions are doing in the market. Now we can see here, based off last week's report, hedge funds added 870 longs, but they started adding a massive 2057 selling positions. I can see how the overall net positions went from 10,201 and now sitting at minus 1,000 minus 1,187, telling us that the net positions had definitely decreased as well. Now, if you go and look at the sentiment data, so this tells us what retail traders, clients are doing in the market. We can see based off the last report that we have 63% of the traders buying. So about that, so we have 63% of retail traders buying. We got 37% of them selling, which gives us a further indication that we could potentially see this break to the downside before the continuation take place there as well. Now, next up, we've got an article over here from Bloomberg here. From CNBC, it reads here that oil slides more than 7% as Shanghai lockdown prompts demands fear. Now, it's very important that you keep in mind that China is one of the world's biggest oil producers next to the US. Now, the key points over here reads that oil prices dropped more than 7% on Monday, which is obviously what we kind of saw over here. Excuse me. It also says here today's price slide is a tribute for first and foremost the concern about demand. The Chinese metropolis of Shanghai has entered into a partial lockdown, said Commerzbank. China is the world's largest oil importer. Another round of peace talks between Russia and Ukraine also weighed on the prices, and that is exactly what we spoke about just a couple of minutes ago. Now, if there's one thing that you need to keep in mind, when the world went into a lockdown, we obviously saw that the price of oil dropped below zero, and because China is one of the world's biggest oil suppliers, if they go into a lockdown, then that means all imports or exports coming from China would then be stopped, because who's going to do the work? Everyone is sitting inside of their houses there as well. So the 7% drop came directly from the fact that investors are now scared that China could probably go into a full lockdown, and we know that investors sell when they are scared and they buy when they are flipping greedy, or they buy the rumor and sell the news. So they know that if China goes into a full lockdown, the prices of oil is definitely going to tumble to the downside, which is going to make their portfolio less at the end of the day as well. Now, we also know that the prices of oil also increased due to the ongoing tension between Russia and Ukraine, but we haven't heard too much happening between those countries or those two places now for quite some time. And this newsletter over here from Daily Maverick says that Kavik says in-person talks to resume in Turkey. Regulator tells Russian media not to publish Zelensky's interview. So you can see there has been ongoing talks between Russia and Ukraine to most definitely come to some sort of an agreement. Now, one thing that you need to remember, this is how it works. When there is when there's talks in the market will move sideways. When the news come out that they've come to an agreement, we will see the move start coming up. If there's no agreement, we'll see that move happening. At the moment, you have the market kind of moving sideways, because why? They are not sure if China's going into a full lockdown, or if Russia and Ukraine talks would bring out some sort of a sense, or if there's anything that's going to happen. But for as long as they're stalling the conversation, for as long as there's nothing happening, we can definitely expect this market to break below that level, and on the retest we can start looking for selling opportunities for the market to go and test that previous level of resistance that is now turned support from a monthly perspective. Alternatively, if the market wants to continue in this range that it has been stuck in here, then we're more than happy to do that as well. Buy, sell, that's what retail traders do. But as always, we have to be reactive and not predictive. And as it stands now, there's no reason for anyone to invest in oil, because why? The tension between Russia and Ukraine had died down, and China are not even sure if they want to go into a lockdown or not. So investors are just sitting there going, well, what must we do? We'll just hold on to our money. Well, that is exactly what you see in the market. When there's uncertainty, the market move sideways. When they know what's going to happen, the market will move. At the moment, investors are going, what the hell is going on? Can someone please tell us? Well, we need to wait for that data to come out. For now, the price action, or my bias on gold, not on gold, on oil, is bearish for the short term, and then from there we can make another decision. Now, if you enjoyed the video, please smash the like button for the YouTube algorithm, and don't forget to share the video with anyone else that you think might be in need of some help as well. I want to say thank you for the support that most of you have shown the channel. I really appreciate it. I want to say thank you for your time, and as always, cheers for ears.